While the Reserve Bank of India has hit the pause button on rate hikes, globally, things are looking so much different. Central banks across the world are battling runaway inflation. They've resorted to monetary tightening in their bid to rein in inflation. Only yesterday, in a surprise move, the Bank of Canada has increased its key interest rate by 25 basis points, pushing those interest rates to a multi-decade high of 4.5%. Analysts are expecting another 25 basis point hike, and this could happen next month. This would take interest rates in Canada to a 22-year high of 4.75%. And this was last seen between April and May 2001. The Central Bank of Canada, much like the rest of the Western world, is battling high inflation, and that currently stands at a 10-month high of 4.4% in Canada. But the country is not the only global outlier. The Australian Reserve Bank as well has defied market expectations. It has raised the benchmark interest rates by 25 basis points to 4.1%. Inflation in Australia is at 6.8%. It is indeed much higher than the central bank's target range of 2 to 3%. The Reserve Bank of Australia's Governor, Philip Lowe, he has said that while inflation in the nation may have passed its peak, like he says, there are still indicators that show persistent inflation. Closer home, of course, the inflation and the rate hike picture slightly different. In neighboring Sri Lanka, the central bank has slashed interest rates for the first time in 3 years. The staggering 250 basis point rate hike has come after the island nation rolled into that severe economic turmoil that was widely reported, including here on ET Now. Remember, inflation had gone through the roof. It stood at around 70% in September last year in the country. And yet we have Pakistan to speak about, our other neighbor, in absolute economic mess. Sample this. Pakistan's central bank raised interest rates to a record 21% in April this year. The 100 basis point hike, it has come in the backdrop of that runaway consumer inflation that has been over 35%. And that's not it. The weakening currency, the spiraling food and energy prices, these are the other big headaches for Pakistan. And the country is likely to force the central bank's hands going ahead as well. But if you think things are bad in Pakistan, they are far worse in Argentina. There, the central bank has raised interest rates to a staggering 97%. What's the reason here? Inflation at a 30-year high in the country, with annual inflation clocking above 100% last month itself. And to make things worse, Argentina's currency has depreciated a lot. It's gone down by 23% this year itself. So from Canada in the west to Australia in the east, things are looking more and more grim, and they're looking unpredictable as well. India, on the other hand, seems to be a global outlier. It is a bright spot, but as Governor Shaktikanta Das has said, the fight against inflation far from over. The central bank must stay vigilant as it goes ahead.